even the other day I was looking at portfolio strategy, and some of these strategies they won't be I won't be able to like prove them until a few years time or a couple months time. So it's all from my experience. So I'm starting looking more into tactical allocation for the short term. So I look at the macroeconomic environment. Like for example, when we had like the Ukraine Russia war, maybe if at that time you had put a good amount of money in the defense stocks, you would be way up despite we're in a recession and the stock market tanking. So when you start to look at different strategies and you learn from your mistake, you learn that you can have a long-term strategy, you can have a short-term strategy, and you look at the macroeconomic environment. Like in COVID time, pharmaceutical companies could have been a good short-term buy at the time. You could have triple your money, head back out, and then when COVID, we're getting back to some form of normalcy, and then now we have the Ukraine-Russia war. Then you have the oil companies that also they benefit from the Ukraine-Russia war. So that would be a way also to like benefit from a short-term strategy. Yeah.
I definitely agree with you because like for the last 2 years, for new investors, I think it's a great time like they could have started investing because it would have taught them a lot of things. For example, the things that you mentioned now, when I just started, I would be like, boy, I wish we were around in 2008 to capitalize on those opportunities. But those opportunities are presenting themselves now. So it's all about how we go about navigating it and spot the opportunities. So you'd have mentioned the oil company, right? So we would have probably have the knowledge, say, boy, we need to buy things when they are done, but it's the thing is you need to move fast and capitalize on the opportunity.
Yeah.
But it's sometimes it's after the fact that you see those opportunities and you say, oh, next time you know what to do. So those things will happen.
Yeah, because things will happen. Like in the next 2 years, 3 years, things will happen. You have to know how to respond. Remember that oil went below zero. So imagine if you had buy some companies when oil went below zero. That would be massive, but sometimes we're not thinking about that at the time. When people are in the situation, it's like it's different when they're in the situation.
Definitely.
As Mike Tyson had said, everyone have a plan until I get punched in your face, and it's really investing. What are you saying now?
No, I was saying now that we're in this phase where the Russia-Ukraine crisis is still affecting certain things, right? Now we have to look when we come out of this phase, where will the opportunities present itself? We still have high interest rates. Now we have to start looking at which companies will benefit again when the interest rates start going down. So that's how we have to start looking at things now. The financial sector, very low. What will happen 1, 2, 3 years from now when things are calmed down? So those are the things that we need to start looking at now to spot some opportunities in the market. Same thing again, COVID, everybody under lockdown. Them time they would have said like the demand for digital services like Zoom that we're using now, right? Things like laptops skyrocket, the inflation and those things.
Amazon.
Right. But on the other side now you have things like the entertainment sector being impacted. What happened exactly after things start to calm down? People start go outside again and you see entertainment start pick up. So that's how you have to start looking at things to spot some of the short-term opportunities as you would have mentioned earlier.
Yeah, exactly. Because if you even look back, some of the companies that were up at that time, they're done now because it's all about expectation. Some of these companies had astronomical profits at the time, but it wouldn't last forever. There's a moment in time, so you have to know when to exit and sell the stock at that time. So you make a profit at those times, anticipate what is coming next, and then you sell.
So our key thing we definitely
So
have we have to watch for 2023 is how BOJ continue to move those interest rates because inflation peaked about 11% back in about April. From then it continued on the decline down in December. September, it continued to tick up a bit. Now, if we continue to have inflation rising, I suspect BOJ is gonna want to continue to raise those interest rates. And that will definitely
yeah,
impact the
yeah,
investments.
yeah, definitely. Yeah, definitely, because I think it fell off a little bit, but in the US, jobs were still increasing at the time. So it's possible that it could go up further more because the economy doesn't seem to cool off fully yet. So we don't know exactly, but we just have to watch where they go.
Because the thing is that and it's like we have two problems now dealing with all at once. When COVID, we think COVID would have done and gone, right? You have the Ukraine,
Yeah,
Russia coming in. No. Now what's happening
yeah,
on the what's happening again now? You have the demand for things like the entertainment sector, the tourism sector, right? So that's inflation
yeah,
again. So things going up. So it's like you have two problems now fighting versus one. So it may
yeah,
take a time to
exactly,
take some effect.
exactly. So in terms of stocks now,